All right, let's get started. My name is Allison Rendelman, team lead of the Customer Success Associates here at YCharts, and I'm excited to introduce today's webinar in which our VP of Product Management, Caleb Eplett, is joined by Nick Maggiulli, the COO of Ritholtz Wealth Management and author of the popular blog of Dollars and Data. Before I turn it over to Caleb to get started, I want to note that we'll have a Q&A session at the end of the webinar. So please, as you follow along, you can submit questions on the left-hand side of your screen, and we'll try and ask as many as we can at the end of the presentation. Please keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Finally, as always, a recording of the webinar will be made available on YCharts and sent to all attendees. Go ahead and take it away, Caleb.
Great, thanks, Allison. All right, so great intro from Allison. So I'll probably skip most of this, but Nick, I did want to especially thank you for gracing us today by joining us in the webinar. I know your fandom is at an all-time high after your appearance on CNBC this week. So thanks for joining us. I know. Got a lot of people excited to hear your insights. Let's jump into the agenda for today, right? So we've got a lot to talk about, so we'll get right into it. I think first of all, we'll spend some time, Nick, getting to know a little bit more about your blog, your idea generation and content creation process. We'll spend a decent amount of time today talking about one of your more recent blog posts where you analyzed the all-weather portfolio and some really cool insights there. And then we'll wrap up by covering some tips that you have to share with all of our listeners for how to be an effective blogger, and also some of the other bloggers and I guess insights that you draw inspiration from. So let's jump in and start by, for anybody listening that isn't familiar with your blog already, Nick, maybe you can give a little bit of insight. And one thing that I think is especially interesting, if I'm correct, you started your blog before you actually got into your career in financial services. Is that correct? So we'd love to hear a little bit about it.
Yeah, so I was working in consulting, so it's kind of related. It's not like it's completely out of left field, but I was working in consulting, and I was like, you know what, my heart's really in finance, investing. I really like this stuff, so I'm just going to start writing, and we'll see what happens. And it really was more of like an economics and investing blog, and I realized the investing stuff just took off more, and I think I was better at it too. I just didn't know as much about economics. I know enough, but there got times, and I was like, okay, I'm out of my element here, let's be honest. So I kept writing about investing, and then I kind of focused more on just all the personal finance stuff. And and so I just started doing it once a week, every single week. And I think it took basically it was 11 months before I feel before I finally was okay, I got to meet people in the industry. I got invited to a conference, and I went to that. I got to meet all the people at Ritholtz. That's basically how I was hey, I want to get a job with you guys. What could I do? And I didn't know that they even needed a data person. So I was hey, I can do data for you guys, and we can do all sorts of insights. And then from there, my role expanded considerably, and now I'm doing a lot more other stuff as well that are just part of the business. But a lot of it's very technical and so I started as a data scientist there, but if you know anything about RIAs, a lot of the COO job is very a technology heavy job. And so knowing data science actually really just allows me to understand a lot more about just the ecosystems and what's going on and what's talking to each other. That's kind of a little bit of background. I've been blogging ever since. So once a week is my cadence at this point. So.
Yeah, I think your blog's great, and anybody on the webinar that isn't already checking it out on a weekly basis, they certainly should. But why a blog? There's so many ways that you have access to media, whether it be social media, blogs, podcasts. Why did you decide that the blogging is the right avenue for you and your voice?
I think everyone has their own medium. For me, I'm going to say I'm a perfectionist. I don't want to say that, but if I'm sitting and we're talking right now, I might misspeak. I might have a weird pause. I might say or something, right? And so it's I feel if I was in a podcast, I don't get to give you the pure, this is what the idea I want. With writing, I can sit there and hone it and be this is now accurate. If I start speaking more and get better at this, I could probably get to that point where I can do more on video and stuff, and I can take my time to write those out. But for the time being, I just enjoyed the writing, and it's been really helpful for developing a lot of other skills and meeting a lot of people. And it really just clarifies your thinking more than anything. That's why I really just recommend everyone write, because you think this seems pretty easy, and then you start writing it, and you're oh, that doesn't really make as much sense, and you have to rethink it, and you go back. It's a really helpful process, I think. So I personally think it's one of the best skills you can have, and obviously I'm biased, but I just enjoy it as well.
Yeah, well, you've come a long way in a short period of time. So I think, that in and of itself, speaks measures. But let's get a little bit into your process, right? So you mentioned this weekly cadence that you have for doing a blog post, which could seem like a lot, could seem pretty overwhelming to some people kind of tuning in. But, tell us a little bit about how you come up with ideas and what your process is to take those ideas and turn them into a post.
Yeah, so I think there's two different ways of doing this. The first way is, when you're reading things as you're consuming content, however, you can read, watch videos, whatever you're doing to consume content. Just write down things you find interesting. Or like, wow, no one's ever thought of it this way. Or maybe I noticed that this thing's related to this thing. That's like one way. It's kind of more of an organic way in which you can create content. And then there's a second way, which is also very effective, but it's a little bit different. And that's like the SEO oriented way, where you go and you use a site like Ahrefs, which if you guys haven't heard of that, ahrefs.com. That's a site where you can look up keywords and you can basically see what are people searching on the internet. And then you can write an article about that keyword. So for example, what I did and what we're going to talk about today is the all-weather portfolio. It wasn't because I was like reading on the all-weather portfolio. I'm like, oh, I need to write about this. It was more because I saw people were searching about that. I said, you know what? I bet I can write an article that kind of explains this even more simply, and then in addition, add some investment insights. That's something that I would normally do. So it was kind of like a mix of a hybrid of the two things. And so I think if you're trying to focus on one or the other, and they're different for different reasons, I think most of the stuff I do is the first one where it's organic, just like, oh, I think it's an interesting idea, and I write about it. The second way, it does get more passive traffic though, because if you're putting out stuff that people are searching for, you already know there's an audience and you don't have to go and fight for attention, so to speak. So I think that's the other thing too. The organic stuff, that's the stuff I post on social media. I try to get people to go there. With the SEO stuff, I still post on social media, but if it doesn't do as well, it doesn't necessarily bother me as much because I know people are going to be searching that term, and if it's a good post and I put in good work, people will be clicking on that link and hopefully they'll read it and like it and read my other stuff. And so it's a nice way to grow your following and get more people reading your work as well. So that's kind of the two ways I do it.
Yeah, I think that's a great idea. We talked about this a little bit earlier in the week, and I went into Google, I searched for the all-weather portfolio. I saw your blog post was one of the first results. So I'm curious, is that usually a goal if you do go the SEO route as far as idea generation? Is your goal to be kind of one of those first results on Google? And then what different steps have you taken over the years to make that an achievable goal for yourself?
Yeah, so I actually didn't start doing this SEO stuff until this year. But yes, I'm trying. Obviously, ideally, you're the first result and you're a snippet. You're like a featured snippet where usually if you're the first result, you scroll down and you'll see that. No, the featured snippet's like that thing at the top where it's like, yeah, this is the one to read. So that's the goal. Obviously, it's really tough because you have to fight against everyone else who's blogging out there. Like Investopedia, for example, they are like one of the best at SEO, and they have a whole company, and they're really, really good at it. And they have a much bigger following, and more people go to their site every day, so they can outrank me. Like even on things that I feel like I might have written a better article, they're just going to outrank me. And usually they do have the better article, so I don't want to talk. I love Investopedia first off. So, but yeah, it's like YCharts too. It's like CNBC or Forbes or someone else writes on the exact same topic. It's going to be tough to outrank them as like a single blogger. But there are times when it's just bloggers talking about something, and if you really write one of the better articles, I think you can move up in the rank. So yeah, I agree with that.
Yeah, so anybody kind of getting into this new, looking to start a blog, kind of taking some inspiration from you, I guess the message is don't be discouraged too quick if your first blog post doesn't turn out to be the first result on a Google search. But with time and building up that following and putting together some good content, it's certainly achievable in, a relatively short period of time that you've kind of made it work, right?
Yeah, I think, don't get discouraged. Like if you go back, don't do this because I don't recommend it, but if you really want to see, go back to like my early posts. I have a couple good ones. I'm not gonna lie, there's a couple good ones early, but most of them, it's like my writing style was terrible. Like the data analysis was kind of weak. Like it just wasn't what it is now. I try to make it better. Of course, I'm still not perfect. I'm still trying to get better, but like you'll see I become a better writer. And I think that just happens naturally as you spend more time writing, more time reading other writers. It's like funny because I used to consume, as much content as I did before I was writing, but now that I'm a blogger, I consume so much more content. I read so many more blogs. I just do so much more generally. I'm always reading more stuff because I'm like, oh, I give it higher importance because I now write. So I view everyone else's writing as more important. So I spend more time on it. I think that's another thing too. So that's helpful.
That makes a lot of sense. And you've built up quite a brand, right? And let's talk about that. I'll move into the next slide here because kind of this idea of having your own brand is not something that's, I guess, unique for you at Ritholtz. It's something that at the firm, we've seen a lot of kind of unique personal brands emerge. So I'm curious kind of what the process is here to kind of help support these individual brands and where that fits into the firm's overall strategy, and maybe even a little bit about how your clients of the firm and prospects and how this all fits into that strategy.
Yeah, so this was all kind of organic. There was no like, okay, here's what we're going to do. We're going to have one of you guys that talks about this one. Like everyone was blogging separately. We kind of joined together. It's more like we have a common philosophy. And yeah, like our strategy is very straightforward. There's no real secret we're doing. It's like, we're just going out there and trying to put out the best content we can. And we're trying to figure out where people are, and we're just going there. So right now we have a YouTube channel, which has like over 45,000 subs. And that 2 years ago was basically nothing, right? And, and we have podcasts we're doing. We're all doing blogs. We even at one point had an Alexa channel, and there wasn't as much traffic there. So we just said, hey, we tried it. We're trying to do everything. That's the idea, is like where we think there might be attention, where we think our voice will shine through. Obviously not TikTok in this case, but like almost everything. We might move to TikTok. Who knows? Maybe Josh is working stuff up right now as we speak. I have no clue, but we're just trying to get out there and put our message out there, because I think people know that content marketing does work. But it takes time. It's not the easiest thing to do. It takes a long time, and you get better with it over time. I think that's generally true, and you learn and grow. So, and in terms of the client stuff, sorry about that. In terms of the client stuff, because we're always communicating about the markets, I think that's really helpful in terms of clients can see that, and they'll say, oh, how should I feel about this? And it's like, oh, someone already wrote a post about this, right? Someone in this network of people, someone is thinking about this issue. For example, this is by chance, but I'm not trying to claim credit like I called anything, and that's not the case here. But on the day of the market bottom, I wrote this post about how, like, if you buy now, like, let's say you think the market's going to take 1 year to recover from the bottom from that particular day. I just happened to pick the bottom, right? I said, you're getting a 50% upside. If you think it's going to take 2 years, it's like a 20% upside for like 2 years, right? Annualized. I'm like, who wouldn't want that? Like, it would be insane. For me, like, if you think it's going to take less than a year, you should be backing up the truck, right? So I did that, I rebalanced, I did all that. And there were people that reached out to me, some were clients, some weren't, and they were like, yeah, this was a really helpful post for a lot of different reasons. So I was like, that's great to hear that I prevented people from, obviously we didn't turn into the Great Depression. Otherwise they would say, Nick, you're an idiot. Like, look, you told us to buy and then it went down. So I'm not trying to claim credit for that, but I'm also not trying to, it's just how it happened. This is the idea of, what's the logic behind it? Like, does it seem reasonable that it's it's going to take 4 to 5 years to recover from this? Maybe, and if then, like, even if it was 4 years, I think it was like an 8% return, which is still great. Like, if you don't want 8%, like, it just seems crazy. Right now we're at all-time highs again, and everything's just wild. But that's kind of interesting to me how the clients interact with it. So
yeah, that's a great story. So with that in mind, when you're putting together a blog post, do you think about who you're writing it for, like who the content's targeted towards? Is it targeted towards certain types of people that you think would be great prospects for your firm? Is it targeted towards individual investors just looking for advice that they can actually act on? Is it targeted towards your clients so that they know how you're thinking? Is it all of the above? What do you think about in that regard?
I think it's kind of all of the above. I mean, and it really depends. Every post is different. Some are personal and they're not like targeting a prospect or a lead or a client or anything like that. It's more just like we're writing about, what we want to write about. I think that's the thing. It's like, hey, would anyone find this useful? Would I find this useful? Sometimes I do make because I know, I already know a lot about some financial topics. So maybe I will, do more explainer pieces, a little bit bigger, a little bit more in depth, where like, okay, I already know some of this stuff, but that doesn't mean it's not good to put in there and like, by the way, this is what a drawdown is. Sometimes I might define a concept that, a lot of my audience probably already knows, right? But still, I think it's useful to kind of have that in there in case there are people who are still like new to this, this entire ecosystem.
Good. All right, so let's before we get too far down this track, let's get into the actual recent post that you made about the all-weather portfolio. So I know you already told us that this was an idea that it was inspired from some of your SEO research, and you thought this would be a topic that could get a lot of eyeballs. But why is this portfolio something that you think is interesting? And then tell us a little bit about just how it's constructed and what makes up this portfolio.
I think it's interesting. So, and this is in terms of when you're writing a post, like a blog post or anything, the most important question is why. Like, why should someone care about this, right? And so, like, I can simply like, oh, well, people are reading about the all-weather portfolio and just be like, and just start writing about it. But that's not gonna get people interested. The whole reason that this portfolio was interesting is because the idea behind it, the theory was this can work in all economic environments. So we're gonna get into the next slide. Before we do, well, what's in the portfolio. So usually you want to tell someone what's in it before we start getting into the whole theory and how Ray Dalio and Bridgewater came up with it. But basically, it's a 55% bond portfolio. 40% of that is in long-term bonds. 15% is in intermediate term bonds. Only 30% in equities, which is kind of surprising because most portfolios have a lot more in equities. And then there's another 15%, which is split out 7.5% each into gold and commodities. And so now if we go to the next slide, we can discuss.
Yeah, before I jump in, just really quick question on this. So you've actually got these symbols listed down that you use to build this portfolio. When thinking about a portfolio like this, where really it's based on a strategy of exposure to certain asset classes, how important is the security selection for you for the specific ETF or fund that you might be using to get exposure to that asset class?
So in this particular instance, because I wanted as much historical data as possible, I tried to just find the things that have been around the longest. And I usually say most things are similar, whether you get SPY or you get VOO or whichever S&P 500 ticker. For me, I mean, yes, there is some minor differences in performance, but for all practical purposes, like just find something that's close to the asset class you want, and I don't worry about that too much. You could even use the total stock market instead of the S&P if you wanted to get more small cap stocks in there as well, and I don't think there'd be anything wrong with that. Or you could add developed international stocks. I don't think that would be an issue either. So in this particular instance, I was just trying to get a lot of history. So that's kind of why I chose it. I was trying to also be U.S. focused because it's mostly U.S. investors reading my blog. So
makes sense. All right, so next slide here, and we're getting into those economic environments you're talking about. So walk us through this matrix.
Yeah, so what this means, the four economic environments on the left side, as you can see, are rising prices, falling prices, rising growth, and then falling growth. And most of the time, so that's what this matrix here says, relative to some expectation. So if the market is expecting some certain level of growth and stocks outperform that, or the growth is higher, then stocks usually do well. That's why stocks are in that quadrant, right? Now, if inflation tends to be really high, commodities and gold can be helpful there. And then usually when things are going badly, of any sort of bonds are the thing to own, right? So this is a very simplified matrix. You can start, if you start putting in all sorts of other asset classes, there's different scenarios where some will work with others, and I don't want to get into all that. I'm just trying to simplify it as much as possible. But the thing is, we're not in each one of the boxes like 25% of the time each. That's not what I'm trying to say with these boxes. Because there are four of them doesn't mean that we're in them, 25% of the time each. And actually, I don't know what just because the United States, for example, has probably spent, 70, 80% of the time in the top, left box. That doesn't mean it's going to be like that in the future, but the whole idea is you weight the portfolio. The all-weather portfolio is made to go through all sorts of these things in case these other ones happen. So when we have, falling growth, or when we have deflation or stuff like that, these other things come in handy.
Yeah, so thinking about that, right, you mentioned how a lot of the time, at least in the history of the United States, that upper left quadrant's been performing really well, which you might look at that and say, well, that would be a very clear reason to overweight stocks in your portfolio strategy. But then you look at this portfolio, which is built for all environments, and it's only 30% equity or so, as you mentioned. Talk a little bit about why that allocation is so small to equities.
Because I think the main issue is when, though we're not in these other environments that often, when you're in them, they're very painful for stocks very quickly. So and that's what I'm saying, when you see 30, we're going to kind of get into these drawdown statistics in a minute here, but you're going to see that once you change environments, it gets very bad for stocks usually pretty quickly. And so because of that, that's why I think the idea behind this 30% or a much smaller sleeve than what you would normally have versus like a 60-40, where literally the equity portion is double. And in this case, I would argue that the risk asset proportion is only 45%, so it's still even below the 60. So it's not even like we're taking that 30% equity sleeve and moving it into other risk assets. It's actually being cut in half and then only being put into commodities and gold, which perform even differently from stocks in fundamental ways.
Great. So if I'm understanding correctly, you don't need a ton of exposure to that higher risk asset, even though it's performing well most of the time, because the benefit that you're getting is the reduced drawdowns or the reduced volatility in these extreme situations where stocks don't perform by having this allocation.
Yeah, exactly. That's exactly correct.
Perfect. All right. So before we jump into some examples of the performance and the drawdown, which we'll get into here, I thought it'd be helpful if you could just tell everybody kind of how you created this portfolio within YCharts and what your process was to build it so that you could start the analysis.
before we go into how, I just want to talk about why I did it, because I used to do all this manually. Like I would go get all the data from YCharts, or different data. I've been using YCharts exclusively recently, but I'm saying before I even had YCharts, right? So I'd have to go find it or ask Michael Batnick or someone for it. Now I'm just like, I don't want to do that. I just click model portfolios. Literally, it's a 3-step process. I click create, I type in all the tickers and weights, and then I hit calculate, and then it did everything. I actually select the benchmark. I had to select how often I want to rebalance, and it did everything for me. And I was like, so it's really just my laziness, and I just want to spend less time. So instead of spending, 3 to 4 hours, putting together all these portfolio statistics you guys are about to see, I spent, less than 5 minutes. And so I think for me, that's a huge value add, because now I can put out more posts and I can spend less time doing the things that like a computer should be doing. Like I don't need, I'm not special at making drawdown charts. Like that can be done by a computer. So that's why I'm trying to leverage YCharts. That's why I did it. So I think that's probably the more important thing here.
Well, good. No, I love to hear that, right? So we love telling that story, but we love it even more when you can tell that story, and we love hearing that we're saving you time and giving you the ability to bring more insights to your blog and then give us all more content to read and consume. So that's great. Quick question on this. You mentioned it briefly, choosing your rebalance period. How important do you think a rebalance strategy is in a portfolio strategy like this, or any portfolio strategy? And, how do you think about how often you should go about rebalancing?
Yeah, so I just say like annually is probably fine. If you want to do twice a year, you can. I think there's been a lot of research on, Corey Hofstein's probably the person that's written the most on this, and like rebalancing, there's so much luck with that already. There's no evidence that like, one rebalancing strategy is necessarily much better than another. And even when you rebalance, like let's say you're doing quarterly, when you do the quarter, like that affects it like by 2 to 3%, which is crazy to think like you're the same exact portfolio just by chance is gonna affect things in weird ways. So the main takeaway is like, don't worry about it too much. The world's going to be what it is. Just pick one and just stick with it. That's the key. If you never rebalance, or if you rebalance all the time, that can be bad. So it's like, just find one that's like, and I do it once a year. I think it's easy. And plus for tax reasons, there's a lot of reasons why once a year is probably fine,
All right. So moving on to the next slide here, we've actually got some historical performance of the all-weather portfolio, and you've compared that to the S&P 500, but also to a 60-40 portfolio. So I think it's really interesting to hear, your take on why a 60-40 portfolio is kind of a comparable situation here, and talk about the performance that we've seen amongst the group.
Yeah, I think the 60-40, because a lot of people use the S&P 500 as a benchmark, and that's great for equities, but let's be honest, most people own some bonds. Most investors own some bonds, or at least people going to retirement are going to own some bonds. I think even a lot of advisors are not going to recommend their clients to like own 100% equities, and maybe in some rare cases, but almost always there are going to be some bonds. So a 60-40 has been like the benchmark for that, and so that's why I compared it here. And you can see it's the all-weather generally was outperforming, and then more recently with the with S&P 500 bull market, it's been on. It's hard for the all-weather to keep up. So that's kind of why I showed it. But what's interesting is all-weather has outperformed the S&P 500 since February of 2006, because you can see what happened in 2008. So you can see that those drawdowns, that's exactly what we were talking about earlier when you change economic regimes.
Yeah, and if we switch to the next slide here, these drawdowns are even more pronounced here, right? So now we've got a drawdown chart where you're actually looking at percentages off high for each of these different portfolios, or each of these different investment strategies over the last, I guess this goes back 25 years or so. So talk about this, right? Because we looked at that slide before, and you saw some of the underperformance compared to a more equity-based portfolio. But what are you getting in return for that, right? You're getting these reduced drawdowns. So talk about how these kind of help stomach these times and kind of make this portfolio attractive to people that are looking for that type of safety.
Yeah, I think the chart speaks for itself. Like you're seeing drawdowns which are much more shallow. You look at the low here at 55% on the S&P compared to all-weather, what's like 15% in 2008. It's less than a third. It's pretty crazy at how much more effective it is at preventing drawdowns. And I think that's going to be, if you have a client that's very sensitive to that, that's why this could be a better portfolio. So
yeah, and I think we can even jump into some more granular time periods here, right? So here we're looking at the financial crisis. You can see the drawdown again, significantly less. The other thing that really jumped out at me on this chart was not only is the drawdown reduced, but this portfolio actually got back to making new highs faster. So it those risk assets in the portfolio kind of helped it recover faster, if I'm looking at this correctly.
Yeah, exactly. And so that's just kind of the thing to keep in mind is like even 60/40, because it has a much bigger equity slice, it's going to be more sensitive to crashes. So.
And then our more recent time period here, looking at the coronavirus crash, or I guess it's hard to call it a crash when you've got the recession highlighted and show both portfolios up about 15%. But
Yeah.
What have you noticed over the last 6 or 8 months or so that how do you think about the market over that time period and what's happening?
Well, I think this is interesting because it shows like, okay, year to date, I think it's a year to date return. Yeah. So what it's showing is like year to date, you would have been down 6.6% with the all weather versus, down, what is that, 13% with the 60/40. So I think this is useful because we just lived through this. So we all kind of have a living memory of it. It's hard to be like, oh wait, like I was 18, I didn't have any money. Like I can't even remember. I remember it, but I don't remember it like an investor. I remember it as a student. I was entering college when it happened, right? Versus now, it's like I saw my money decline by X percentage, and I can be like, wow, I could have, if I just had the all weather, I could have had 6.6% decline instead of that. But there's trade-offs associated with that, which we can get into. But I think this is why it's much more real now to think like everyone probably has an idea of how far they were down during coronavirus, and this just shows why this portfolio can be popular.
So we've gone through a few charts now, right, and kind of showing the same story, showing the drawdown, showing the limited exposure to risk in this portfolio. How helpful are these visuals? I know of dollars and data, right? The data component is a big part of your brand, but how helpful are these visuals when you're actually thinking about talking to clients, or do you find that a chart really helps tell the story and goes a little bit further than just the writing or the conversation you might have with a client?
Yeah, I think that the chart, it backs up the story. And as I said, the story is the key point, the why does this matter? Why should you even consider it? And then the chart is the backup. It's the evidence. Hey, look here's what happened in history, right? If you don't know, here's what you would have seen. I think that's, as I said, that's kind of the driving point I want to emphasize here.
Well, there's a trade-off, right? So, with any portfolio strategy, there are time periods where it works really well. There are time periods where you're probably going to underperform another strategy, right? So here we've got the last 10 or 15 years here of kind of cumulative returns, and you can see that 60/40 is actually tended to outperform. So jumping into the next slide here, I think, when would you actually recommend a strategy like this? When would you say that those trade-offs outweigh, those benefits outweigh the trade-offs of the sacrifice and returns? Who would you recommend a portfolio like this for? When would you use it? When wouldn't you?
I think, yeah, for people who should consider doing this, these are people, if you get very emotional about drawdowns, you're very sensitive to drawdowns. And if you just want something that's, I think, generally pretty simple, this would be a decent portfolio to hold. There's others you could have too. I mean, this is just one of many. There's other ways you could get at this, and for example, what we do at our firm is a little different than this. We don't use the all weather, but we have ways of kind of getting it, the same underlying theory behind how to use this. It's kind of, we incorporate some of that as well. And then the people that should not invest in it, if you need high growth, this may not be the portfolio going forward, because as of right now, bonds are yielding basically close to zero. And it's 55% bonds. I'm not saying that you shouldn't hold bonds because they don't have income. There's other reasons to hold bonds outside of income. There's diversification benefit. There's, during the crash, right? For example, I happened to rebalance on the bottom. I got lucky, but when I rebalanced on the bottom, I got far more growth from that, because I had this extra, safe asset that kind of went up a little, and then I sold some of that off to buy some of the stuff that went down, and just by chance it recovered. So there are other reasons to own bonds, but if you need higher growth, it's not going to come from bonds. That's just the reality. I can't change it. That's how the whole world is in basically no yield. So we have to accept that as investors. And then the last thing, if you're someone who obsessively looks at performance of individual assets, this is not going to be for you either. Because if you're looking at your gold and it's like, this gold hasn't done anything for a decade, you're like, screw this, you'd probably attempt to sell it and not hold it. And in the times when it actually has performed decently, you're just not going to have it. So this is why that's probably the thing that bothers me the most, is why it would be hard for me to hold this portfolio because of that. I do look at individual asset class performance a little bit. I don't overly obsess, but if I see an asset that it's been 15 years and it's still in a drawdown, and I'm not seeing any sort of, especially something like gold where there's no real, it's like you're owning a business that throws off cash flows and stuff. It's like it's a commodity and it's based on what other people are paying. It's tough to stomach that and to hold that over the long term.
Yeah, and something you mentioned, right? So, going back a few minutes, you mentioned that part of the inspiration for this blog post to begin with was some of the SEO studies that you did, right? You've explained the portfolio really well. You've talked about all the benefits. You've gotten me excited about the strategy. But then you mentioned that this isn't actually a strategy that you use at Ritholtz with your clients specifically. So how do you, I guess, silo out something like this that you're going to use as a content piece, and then explain to a client or an incoming prospect how you're actually going to, find a better solution for them, maybe that your firm actually is experienced with and works with, and just keeping those ideas separate for people that read your content, but also engage with your firm for your services.
Yeah, so I think there's you have to realize like these types of things where it's like we have a portfolio, the ideas of the portfolio, for example, reducing drawdowns, controlling emotions in different ways. Those all matter, and we do incorporate those things. But we have an investment committee that does this. Like, this is a Ray Dalio idea. And our investment committee takes those ideas into account, but they'll take into account other people's ideas, and they look at things more holistically and try to provide a solution that here's kind of the overarching idea, and then our advisors meet one-on-one with clients, understand those individuals' risk characteristics, and then recommend accordingly. So I think it's a little bit different. So it's not that like we think like I say this could be a great portfolio in this situation. That doesn't mean that like we would never, you could never own it. I think this is more, remember, I'm also writing for retail investors and do-it-yourself. Remember, most people are do-it-yourselfers. I think it's like 2/3. Only 1/3 will actually, allocate their money to an advisor. But still, so I know those people are reading it. So it's more about everyone else that could be reading the post as well.
Yeah, I think that's an important point. I think, at least a lot of the clients that we talk to when they're looking at putting content together, they're always so worried about that content aligning with all of the strategies that their firm offers or all of their principles. But, not only with this, but you'll even go completely off topic sometimes on your posts and write about something personal and, bring a different flavor to what you're putting out there in the market. So, I think that's a great point. It's okay to have a brand, outside of your investment strategy of the firm that you use with your blog or maybe with some of your social media posts and things like that. So,
yeah, exactly.
All right, so I think this is one of my favorite slides. I'll let you talk about it because when I first saw this picture, I had no idea what I was looking at, but the way you explained it, I think really got me interested. So go for it.
Yeah, so as I said, every when you're writing using data-driven content, things like that, charts, graphs, whatever, everything has to support your story, and if it doesn't, then it's kind of useless. So for example, if you look at this, what is this thing, this chart, this circular thing, I don't know what it is. It has no story, it has no context, it doesn't mean anything to you, but it's actually, I think it's one of the most beautiful data visualizations I've ever seen. And what it is, it shows the first 4 months of a baby girl's life, and it shows her sleeping patterns. And so the light color, the cream color, is when she's awake, and the dark color is when she's asleep. Now, what the actual visualization is, the first day of her life is near the center, and as it goes out, almost like tree rings going outward, is every additional day. And what you can see is slowly over time, she's learning a circadian rhythm. So you're really seeing an organism learn about, okay, I sleep at this time, I'm awake at this time. And so I bet if we had even more, remember, there's only the first 4 months of a baby's life. If we had this going out further and further and further, you would see this get more and more regular over time. And I think that's kind of like really cool. And that's a really cool way to show data that's very intuitive. Now that I've told you the story, now it makes sense. Oh, I can see like in the first couple months, the baby's awake at night, and like these are the parents who are dealing with this. It's havoc. And for anyone who's had children, you probably can relate to this. Like, oh my gosh, this is crazy, but this is exactly kind of what it's like. And every child's different, but in this particular case, this child looks like they were a decent sleeper after maybe the first month or so. And yes, they're up sometimes at night, but most of the time they sleep through the night. So I think that's kind of cool to kind of how you use data to support that story. And so the story here is about the child and learning to sleep. So.
Do you ever experience the opposite situation where you have a great story, great idea, you pull the data together and you look at it and it just doesn't really support the thesis that you had, or the picture's not as clear as you hoped it would be?
Yeah, all the time. And then it sucks because you could spend a lot of time like digging up the data, doing all this, getting it, and then you get it and it's just not there. And then you got to start over. And that's why I think it's really tough. And you can imagine the same thing in academia, it's even worse, because imagine you've been working on a research project for 2 to 3 years. and then it doesn't come together, and then you have to abandon a project. I'm just writing a 10-hour blog post. So for me, it's like, okay, 10 hours, that sucks, but I just move forward. Or 5 hours of research, whatever. It's a couple hours lost time. Imagining this for years and getting data and all this stuff. And so it can be tough. And I think anyone who's done this a lot knows how demoralizing that can be, but you keep digging, eventually you'll find something,
So, we can get into a little bit of the, I guess, other content creators that you follow, and if you want to talk about a few of them and how you look for inspiration, but would also just love to hear, any tips and specific advice you might have for somebody just kind of getting started, or even somebody that has a blog or a newsletter and they're not getting the amount of traffic or traction that they'd like with it. Any suggestions?
Yeah, so just in terms of like the people I follow, I try to get a very diverse set of ideas and different types of writers too. Some are much more technical. So for example, Breaking the Market, he's a newer blogger that came out. He's great, but he's much more technical. And I think Burnt Hover's also pretty technical, and he's on Substack. But then I also have more generalists like Ramit and Morgan, and then I also have, there's also people who are just really entertaining to follow. And so Jim O'Shaughnessy actually is a very technical person. He wrote, works on Wall Street and stuff, and now he's more known for his gifts and being very, cheerful and all that. It's great, but you want to have a wide array of different people you follow. I think that's good to get different types of content, to consider different perspectives, things like that. These are just a handful of people I know that are pretty active in terms of blogging. But yeah, so, and then in terms of, advice, like the thing that worked for me, it's not going to, remember, what works for me may not work for you. That's the one takeaway. So I really want to emphasize that point. But what worked for me was just being consistent, going on a schedule. That's it. As long as I posted one thing a week, that was it, and just, you'll get better naturally. You won't believe it, but as you slowly do it, you'll get better. I'm not saying you're going to be the greatest thing ever or anything. You just gotta keep trying and do your best, So that's my best advice I can give.
And what about for overcoming that writer's block that hits every now and then, right? You sit down and you're like, what am I gonna write about this week? Do you have any kind of go-to strategies for coming up with ideas when you don't have a pipeline of good ideas that you've got to fall back on?
I think that's generally an issue of you're not consuming enough content that's making you think about crazy stuff. Because once you consume a lot, you're reading a lot, you're doing all that type of stuff, you're watching whatever the YouTube videos that could inspire you. Because I've actually gotten inspiration from watching YouTube videos. So I'm not just saying you have to read, but once you're doing that enough, you'll get ideas. Write those ideas down. Collect ideas in drafts and stuff. Just put it down and if something else you find, you'll start, wow, these two ideas are connected. And then you'll notice, oh, someone else kind of talked about this in a different way. And then you can create a whole post out of that. And that's what I do all the time. You'll notice, like, I've had 5 or 6 different ways of looking at the same thing. Not always, but sometimes, right? And so that's the key, is just like keep consuming content. The more you consume content, your brain's just made to make connections. So the more content you consume, the better you're going to be at finding those connections.
Thanks, great advice. Thanks. All right. So I think that we have some questions, right? So Allison, if you're still on, I'll let you take over. I know you've been kind of taking care of the question queue as we've gone over the last 30 or 40 minutes or so. So if anything's jumped out as far as audience questions, fire them out.
Yes, definitely. We definitely have a couple for you guys. I just want to thank you so much, Nick, for joining, and Caleb for hosting us through today's discussion. Before we do jump into that Q&A, I do want to reiterate that we'll post a recording of this webinar on the support topics section of YCharts in case you want to review anything we went over or to share it with your colleagues. So yeah, if you guys don't mind, we have a little bit of time here at the end. I'm going to ask a couple questions that we got in during our discussion. The first one is pretty quick. Nick, at the very top, you mentioned a website that you use for SEO results, and a lot of people actually messaged in asking if you could restate what that site was, because I think there was a lot of interest about that.
Ahrefs, so it's ahrefs.com. Now it costs money. It's like, I think it's like $100 a month or something. It's $7 for like a week, and then it's $100 a month after that. So it can be a little expensive. But what I do and I find useful is, if you don't want to spend that every single month, just sign up for the trial, spend your time in there doing research, finding your keywords, you can build a content plan. You can spend 3 to 4 hours in there and you'll find, like, okay, here's 20 topics to write about. And then you can, this is terrible to say, but like, then you can cancel your membership because you're not using that data anymore. You just do and build it out, and you can cancel your membership. So because, like, for example, I did this very early, not the canceling part, but I mean, I spent 4 hours building a content plan, and then I had I have like 20 posts, and I've only written half of them. Still, it's like it's already it's already September. I've only written half of the SEO posts that I wanted to write. There's still a lot more I need to write from those hours I spent a long time ago. So you can build an entire content plan of like, I can write about this, I can write about this, I can write about this. Specifically, if you have like an expertise in a very specific area, like for example, let's say you're really big in, you're an advisor that works on like a state law or state planning. I'm sorry, not state law, state planning. You can find what are people searching for in estate planning and find those esoteric topics and be like, wow, I've read these articles, I can write a better one. Bam, go do it then. You'll rank, in theory, if you do it enough. So that's the key.
Okay, great, thanks. I think that really helped clear it up for a couple of people. Another question we got in is, this one comes from Scott, and he asks, based on the content of Nick's blogs and its content, is it geared and written with an audience of financial advisors and others in the industries, or for retail investors? If for both, how do you find the balance?
I think it's probably more retail investors than financial advisors specifically. But there's a lot of overlap. Like a lot of times when I'm writing about the all-weather portfolio, do I expect advisors like, you know what, we're going to change our whole investment strategy? Like, no, of course not. But I do expect advisors to look at the portfolio and say, these are the kinds of ideas that people care about, like reducing risk and all. Advisors already know this stuff, right? But I think they can find value in it regardless, because they can see how they could present similar arguments about their own portfolios, right? If that's true, right? If it happens to be true. So I think it's a little bit of both. Like I try to do it more for retail do-it-yourselfers, because I know that's most of the audience. But at the same time, I also, I know advisors do read my content. Sometimes, like for example, I know the dollar cost averaging versus lump sum. Let's say you have a client that has $1 million in cash, and like I don't want to put it all in at once. That I know advisors read that all the time, because they're in that scenario all the time. They're sitting with the client, and the client's like, I'm not sure if I want to jump in. I'm like, well, here's the mathematics. Here's what that says. I know math isn't everything. There's emotional reasons why people won't do stuff, and I'm not saying you have to do it just because of the math, but here's what the evidence shows. And people were probably freaking out in March and April about putting cash to work, and everyone who did in this particular case would have done quite well, and everyone who's dollar cost averaging is technically underperformed. But who cares? We're now here. You just got to move forward. But that's kind of one of those examples where advisors would have probably liked that content a little bit more.
Okay, great. Just one final question I think we have for today. As an advisor, how can you better fold in research on topics you like and creating content for your targeted niche?
I think you just got to do both. Like for example, sometimes I write about stuff that may not be necessarily in the niche, but if you just got to make it interesting, like I think people just want one of two things. And I think this is something like kind of, Josh Brown is like really, told me, is like they either want to be entertained or they want to be informed. And if you can do both, that is the magic. If you can do both of those things at once, that's the real key. So either entertain them or just inform them, like, wow, I never knew that. For example, here's an example of, I started a blog post like this. George Washington died before anyone knew dinosaurs existed. Like George Washington did not know about dinosaurs when he died, right? It's like one of those things of like, that's just a fun fact, but now you know that. And it's like, dinosaurs are a new concept. There weren't people, 500 years ago talking about it because it didn't exist. It wasn't an idea. So to think about that, think about how knowledge changes. That's like a simple example of, no, you may not care about the rest of the post, but I just entertained you in some way or informed you. So do that. If that's the issue, like, oh, I want to write about this, well, then make it, even if you really love it, make it more entertaining, make it more informative. And I think people will appreciate it, even if they don't like your topics. And actually, just recently, someone on Twitter said that. They said, I don't really, and it was unfiltered truth, but I like, he said, I don't really like a lot of the stuff you write about, but I still read it because I think the way you write it is what's important. And that's why I get value from it, even though I don't necessarily care about like the all-weather or whatever it is, right? So I think that's the key, is like entertain and inform.
What a compliment.
Awesome.
Yeah, it was a compliment. It was a backhanded, but it was true. It was very true. And I appreciate it. I said, thank you for the unfiltered truth, because he's like, hey, I really think a lot of the stuff you write about is kind of bland, but the way you write about it's good. I'm like, okay, well, that's good at least, right? So.
Well, Nick, I just want to say thank you again. Thanks for joining us. Again, anybody that doesn't already check your blog out on a frequent basis of Dollars and Data, you've got a newsletter too. Sign up for that, and the blog comes to your inbox, every week as it's posted, which is great. And of course, watch out for more appearances on CNBC, and we'll be taking the media by storm even more in the future, I'm sure. But
Hope so. Let's hope so, Caleb. Well, yeah, and thank you guys for your time. I appreciate you guys hosting us. So thank you, Caleb. Thank you, Allison. Really appreciate it. And if anyone wants to, feel free to DM me on Twitter if you have questions or anything. I'm always, answering stuff, talking to people, whatever. It's always good to hear from people. So, all right, thank you.
All right. Well, thanks a lot, everybody. Thank you, Nick. If anybody wants some more insights on how to use YCharts, similar to how Nick is, to put some great content out there and take a look at some different portfolio strategies and things like that, definitely check out our website as well. And you can start a free trial. We encourage you to do more than just a free trial, even if you're just taking a free trial for Ahrefs. But no, we think we have some great stuff that you'll really enjoy. So come check us out. Happy to answer any questions that you have. And thanks so much for the time today.
All right. Thanks to both of you, Nick and Caleb, for covering these questions. And thank you all for attending today's webinar. We always appreciate any feedback you might have for us. If you have any questions regarding what we covered today, please feel free to reach out. Thanks again.